Okay, everyone, good afternoon and welcome to the second sessions of our Dialogue of Continents. We just finished a very interesting conference about central bank experimentation in monetary policy. And this afternoon, I'm a pleasure to welcome our guests from, in fact, different continents to discuss financial inclusion and digital finance. And this session will be followed afterwards with a more also policy-making oriented session about the new digitalization of international finance. I'm pleased to welcome our chair, Oksana, who is Head of Access to Finance and Entrepreneurship at the EBRD, who will introduce our speakers and will moderate these sessions. Oksana, thank you very much for sharing it. Thanks also for the EBRD that has been a strong supporter of our work and this conference for many years. And I'm very pleased to give you the floor. Oksana, please.
Thank you very much, Mark. Let me start by also thanking the Reinventing Bretton Woods Committee and the Hamburg Institute of International Economics for organizing the third Dialogue on Continent Forum called the Age of Imagination. I'm very excited to facilitate this session as the issues of the financial inclusion and digital finance, and in particular access to financial services for women, youth, population living in the rural and the economically depressed regions are at the heart of the economic of the Gender and Economic Inclusion team of the EBRD that I represent. And our event is taking place during the COVID-19 crisis, and the ensuing unprecedented economic disruption have the potential to entrench and even exacerbate the existing inequalities. In line with the spirit of the event, we have distinguished speakers from 3 continents representing the international organization, interregional organization, public and private sectors. I will have a pleasure to introduce each speaker before passing the floor to them. Without further ado, let me welcome Subir Lall, who heads the Middle East and Central Asia Department of the International Monetary Fund and boasts the country experiences from Asia, Europe, Middle East and Central Asia, and as well as the Western Hemisphere economies. Subir has been co-author of the IMF's World Economic Outlook and the Global Financial Stability Report. So it's a pleasure to have Subir with us and tell us his perspective on the potential macro and macroeconomic benefits that can be derived from the greater financial inclusion. Subir, over to you.
Thank you very much, Oksana, for that kind introduction. Thank you also to the organizers and Mark, of course, for this opportunity. This is a very timely conference, and I'm happy to be part of this panel in particular. As Oksana also said, this is a big priority for us as well, financial inclusion, and including when it comes to issues related to the differential access by gender and also by the size of companies. That's very important, both for the Middle East, North Africa region, as well as for the Caucasus and Central Asia. So I'll be very brief in these remarks here to keep to the time limit, but we can come back to the discussion after everybody has spoken with some more, drilling down some more in detail. But just to set the stage, even before the COVID-19 pandemic struck, countries in the Middle East and North Africa region, as well as Caucasus and Central Asia, which we call CCA, they faced the urgent challenge of creating jobs for their growing youth population, and populations had been rising in many of these countries. And we estimate that about 20 million young people in these regions will join the workforce by 2025, which is not that far away. The pandemic, and with its profound potentially long-term impact on the economy, especially due to scarring, has made this challenge even more daunting. So the way we look at it is that where would the jobs come from? And if you look, as you all know, globally, half of all employment is created and sustained by small and medium enterprises, and which of course account for more than 90% of all firms. That's also true in the MENA region, for example. And so SMEs and startups can be the source of dynamism and create the bulk of the jobs that are needed in the region. And that's why this panel today is also particularly important, because if it helps focus attention on the fact that this is where the source of much job creation can be and what the impediments are. And of course, access to financing is a key impediment to SME growth. Seed capital, loans to grow working capital, and the regions that we're discussing today lag most others in terms of SME access to financing. According to the World Bank Enterprise Survey, about 32% of the firms in the MENA region, and we also include Afghanistan and Pakistan in that in our geography, they report access to credit as a major constraint, almost a third of them, that is. And the world average is about a quarter, so it's a bit more. In the CCA region, it looks a bit better. 18% report access to credit as a problem. If you look at the amount of credit that did go to SMEs, it's about 6.5% of all lending in Central Asia and about 7% in the Middle East. And so, just in terms of background, there is clearly an unmet need. And just to wrap up, our research has shown that inclusive growth and on inclusive growth, that financial inclusion has multiple economic benefits. I mean, I don't need to tell you, all the distinguished members of this audience, of this panel and the audience. It fosters growth. It boosts the effectiveness of fiscal and monetary policy because it broadens the financial markets and the tax base. And greater financial inclusion can also benefit financial stability as long as there is strong financial supervision and risk management standards are being kept at a high level. The potential benefits of SME financial inclusion are in the MENA and the CCA region are particularly high. And our 2019 study estimated that annual economic growth could in some cases be boosted by 1%. And this leads to an increase by giving this access. It also increases employment growth annually by 1 percentage point. And that would be in line with the findings from the literature. And these gains are, of course, much larger for SMEs. 1.3 percentage points is what we found. Large firms is a little smaller. It's about 0.8%. And international, maybe I should stop here and we can discuss the factors that help in achieving sustainable access to finance later after the initial round, perhaps. Thank you, Oksana. Back to you.
Subir, thank you so much, and I'll definitely take you up for offer for more comments on the trends on the financial inclusion to the SMEs. But now let me turn to Kairat Kaliyev, the chairman of the board of the Astana International Financial Center. Kairat also chairs the board of directors of the Fintech hub at the Astana International Financial Sector and builds on his experience in the financial technology department where he started. Kairat also brings a wealth of the banking and financial regulation experience from his earlier days at the National Bank of Kazakhstan and the Development Bank of Kazakhstan. I would like to ask Kairat to comment on the Astana International Financial Center's role as a financial sector center that increases financial inclusion directly, and the Kazakh policies towards fostering and developing of the digital economy and innovations. Kairat, over to you.
Yeah. Thank you very much, Oksana, for introduction. Saying about financial inclusion, so we can, as Astana, as AIFC, was created to develop financial services, mostly undeveloped in Kazakhstan before, such as capital market, Islamic finance, asset management, private banking, and one of the main pillars which I'm dealing with is Fintech. And as we know that Fintech allows, let's say, democratize and allows a lot of people to participate in cashless economy, for example. And now we see that Fintech and e-commerce is growing together. So you even sometimes cannot divide which is e-commerce, which is Fintech. And we see a modern marketplaces and super apps which combines a lot of functions in one app, and the people used to it. We know, for example, WeChat in China. So in Kazakhstan, especially due to COVID pandemic, cashless payments and e-commerce are growing very fast. For example, cashless payments grew 2.5 times this year. So it's very it's very fast for us, even for us, and about 70% of e-commerce trades was due to August of this year. I mean, from the beginning of this year. So it's very COVID very much influenced to this growth, and I think that two very interesting stories this year in Kazakhstan. First of all, as we know that Kazakhstan government of Kazakhstan provided economic assistance for people who lost their jobs during quarantine in Kazakhstan, but faced problem during delivering this assistance to every person, and our eGov portal was down for some period, and they even had to open new website to take these applications, and it was one problem. And second problem was that people who applied, many of them haven't even had a bank account. It was unbanked population. So it was like the second big problem which government faced, and recognized that we wasn't really prepared for the situation. And it was a direction that we have to work on closely. But again, this caused that, first of all, government now working on developing a special social wallet for these situations in the future. For example, it's like a very fast developing project now in government. And second one, it was government had rapidly and central bank rapidly allow a remote onboarding for people who unbanked to make onboarding in banks, because again it was quarantine, they wasn't able to come to bank offices. And the third one that government had to do, it was very fast decision too, and very good decision, to involve financial institutions. Many banks like added apply function for this for people who had bank account and app to apply through the app for this assistance, and like receives directly to your bank account, and that's how they like very fast during 1 month they changed this rules and changed like found the solution. But to my mind, like we have to, so we can do it if we want or if we need, but we have to develop it all the time. Like it should be sustainable, like development of this, and fintech plays like key role in this situation. Second story, it's more positive. It's IPO of our bank. Like now they like position themselves as fintech company, and it's released fintech company and marketplace Kaspi. You probably have heard about it, and it's a very good story of transformation of traditional financial institution, traditional bank into fintech company and digital company and marketplace. They made a tremendous job on transforming. They really bought the platform. They hired a lot of IT staff, and during several years changed the way how they provide services, and really and it is first of all it's very popular, and second they are building a marketplace and ecosystem, not just like bank function, and they made very very successful. I think IPO raised 1 billion and with capitalization of 6.5 billion at that moment, and now the capitalization is growing. And I think that's a very good case for fintech, for not for Kazakhstan only, for post-Soviet financial institutions, that it's possible to, and I mean, it's not only possible, it's needed to make this transformation, to develop fintech and support new trends and the technology, and utilize the technologies to leapfrog to new level. I probably
Thank you very much, Kairat, and I'm sure that my ex-colleagues in the financial institutions team would be very interested to learn more about the transformation process. But now let me turn to our third speaker, Denelle Dixon, who is the Executive Director of Stellar Development Foundation, a non-for-profit organization that builds, sustains, and grows the internet for payment using the blockchain technology. With its Stellar network, Stellar Development Foundation serves its mission of delivering global financial inclusion. I'd like to ask Denelle to offer a private sector perspective on the trade-offs between encouraging the innovation and creativity in the digital financial services and managing the legal and regulatory risks. Over to you, Denelle.
Thank you so much, Oksana, and I'm so honored to be on this panel with these distinguished guests. Thank you. This is such a great topic because, you know, every time that we think about regulation from in the private sector, and certainly I've been in technology for a really long time. I call it on the content side of the web, whereas here I'm on the payment side. And I always think about regulation as something that needs to be only regulate where necessary. And then the second factor is regulate at a principal level when you're dealing with the speed of technology and how it grows. And I think that there's a lot of countries all around the world who are very mindful of those two things and trying to do that. With respect to the blockchain technology and frankly, just fintech generally, I think that you know, it depends on the country, but we're seeing a lot of openness to the ideas of it. I love the stories, both of them actually, I thought were very positive that Kairat just talked about, because when you think about the ability to even move that quickly into providing a wallet that folks could use, and to thinking that technology could actually help to solve the problem, that's essentially what blockchain and other technologies out there that fintech companies are working on are able to solve. And so when we think about regulation, I like to talk about the network, for example. The blockchain that we support and that we shepherd the code base for is the Stellar network. There are others. We are open, decentralized network that is really think of it very similarly to the internet and to the underlying technologies that support all of the really wonderful innovation that happens on the internet. And so when I think about regulation, I think about we need to really maintain that separateness from trying to regulate the underlying technology layer. So that layer that's the open, decentralized network that makes it, that it is sort of the platform that other entities build upon, should remain unregulated, because it's very, very similar to the underlying technology of the internet. In fact, it is the same. It's just computers all over the world supporting this technology and making it run. But when you think about the fact that when we're in the payment sector in particular, and you're trying to really, really move the notion of financial inclusion, there's always this idea that you're touching fiat when you're a financial institution, that you're building on top of a network and you're trying to provide a wallet, or you're trying to provide lending opportunities, or you're trying to provide other solutions for not just consumers, but for businesses. You're touching fiat, or you're converting fiat in some way. And those entities are already regulated by, everybody knows, all these different governments around the world know very well how to regulate money, and they've regulated fiat for a very long time. And so my focal point when I'm talking to regulators and governments all over the world is, don't jump into the necessary idea that just because it's new technology and just because you have financial institutions doing something differently, that you need to instantly think about regulation. Because if you look, for example, the Know Your Customer, the anti-money laundering regulations that already exist, they cover much of what these financial institutions are already doing. on in offline world, and then also when you get to the digital world, they cover that as well. So we have all of these compliance compliance regulations, as well as regulations that focus on how they can use and what they can do with customers' money. So when I think about regulation and I think about that risk, I think the challenge with the regulatory risk when we're dealing with these new technologies is that governments get so concerned that they don't understand the technology that they right away either say we're not going to allow digital assets, which I think is something that we need in the sector that's focusing on this development, to really spend more time with those governments to explain to them what we're actually doing and what the platform is actually allowing. And I'd like them to be more resistant to automatically moving to regulation, because it will quelch the innovation and the opportunity for creativity. Right now, what we're seeing is that we're seeing lots of these entities that already are financial institutions that are regulated in these different countries build these opportunities for folks to be able to send money between one region across a border to another region to family in a way that is perfectly compliant with the regulatory regimes that exist, and also very, very fast and inexpensive for the developer, which hopefully translates down to be less expensive for the individuals or for the businesses that are using that technology. So I'm very optimistic about the regulatory frameworks. We are working very closely. I think part of what happened back in the days, 20 years ago with the internet, is that there was this concern that if there was too much attention paid to regulation or to regulatory bodies around this technology, that there would instantly be regulation. And we're taking it from the flip side this time. We engage as much as we can with regulatory bodies and legislative bodies to be able to explain the value of this new platform and to show what phenomenal opportunities are being built for financial inclusion, but also just to solve everyday needs of companies that are looking at different geographies that they're working in. So it's really exciting to me. And I feel like we have to do our part on the private sector side to get governments comfortable with the new technology. We can't just say to them, don't regulate us, which is, I think, what we did wrong on the content side of the web.
Thanks a lot, Denelle. That's very interesting, and would like to continue this discussion also in specific to our region that EBRD operates. But let me turn to our last but not least speaker, Heba Ali, Chief Research and Statistics Division at the Arab Monetary Fund. Heba is a member of the IMF Joint Mission on Bond and Sukuk market in the Arab region, and has previously held various positions in the Egyptian Cabinet of Ministers. Heba, can you quantify the cost of the financial inclusion to the economic growth of the region where the fund operates? We can't hear you.
You can hear me, Oksana? Okay, let me start by thanking Reinventing Bretton Woods Committee for inviting Arab Monetary Fund for the dialogue of the continent, and in particular in this important session for the Arab region. And to start by shedding light actually on the current status of financial inclusion in the Arab region, and due to the considerable efforts of the Arab governments, we have witnessed a significant achievements in financial inclusion levels. It's already increased from about 22% in 2011 to around 37% in 2017. And actually this reflects the major advancement in legal and regulatory frameworks in the Arab region. And this enables some Arab countries to achieve double-digit growth in number of accounts. However, I think still a lot of effort need to be exerted yet to increase and stimulate access to finance in the region in general, but in particular for certain segment within the region, mainly the youth. Youth contribute around 60% of our population. However, around 21% only of the youth have banking accounts. And on the other hand, the Arab region also has the largest gender gap across the world in many aspects, but in particular in financial inclusion. Only 26% of women have banking account. And as Subir already mentioned, SMEs is a very important segment within our societies and within our economies. They contribute around 45% of total GDP and around 1/3 of formal employment. However, banking facilities extended to this sector does not exceed 9% in 2019. So now we are talking about very important segments of the Arab societies which are excluded from financial access, and this already, as you know, have a negative impact of economic growth within the region. And actually, a part of research in Arab Monetary Fund was focused on quantifying the impact of financial exclusion on economic growth. And we found a strong relationship between financial inclusion and growth. And as every 1% increase in financial inclusion help our member countries to increase growth by 0.7 to 0.8%. I think it's already similar to what Subir has mentioned already, which is 1%. So I think it's a priority for our member countries to increase the financial inclusion. And this is why a part of the efforts of Arab Monetary Fund in the past years was already concerned on how to stimulate access to finance within the Arab region. We have many initiatives that tackling this issue. We have the FIARI initiatives, which is financial inclusion for the Arab region initiatives. It's already conducted in collaboration with the World Bank and with the Alliance of Financial Inclusion and other financial institutions that aim mainly to increase and to overcome all the challenges that face member countries in this regard, and in particular for youth, women, and SMEs. And in addition, and building on the importance of digital financial inclusion, we have recently launched the Arab Fintech Group in 2018, which is a collaboration between the regulatory authorities and the industry experts and also international organizations to ensure that all our member countries have enabling environment to support and encourage fintech technology in order to have some kind of advancement in the financial services efficiencies and increase access to finances through ID, digital ID, through know your customer, electronic EKYC, and also central bank digital currencies. All of our efforts is mainly concentrated on how to overcome the challenges in this regard. And also on the other hand, also we have another intervention, which is SME facility, this is a loan facility, through which we provide financial resources to our member countries to ensure that they have a conducive environment for SMEs through 5 main pillars. One of these pillars is actually access to finance. So we have mission to visit our member countries to quantify and to identify the major challenges that face SMEs in access to finance and provide financial resources to these countries to help them to conduct many reforms that enable them to have some kind of credit report system that is already convenient to SMEs, the sector, and the credit guarantees. So through this facility, we provide financial resources to support SMEs to have access to finance. So I hope this replied to your question, and back to you. Thank you.
Thank you very much, Heba. And if we have time, it would be really lovely to hear about the other pillars of your SME support initiative into your member countries. I would like to sorry, I think I've lost the connection for some. I'd like to go back to Subir and ask Subir if you could comment about how the technology can leapfrog the gap, in particular to the most underserved groups, and what policies would the fund recommend to the regulators to promote that?
Sure, Oksana, I'd be happy to. I think before I get into the technology aspect, maybe one general point from our work and our studies has been that we need to look at overall like holistic reform strategies to improve financial inclusion. And there's no sort of magic bullet in the way to increase it in a meaningful, safe and sustainable way. And in fact, partial approaches are unlikely to suffice and may have unintended consequences. And by that, I mean, for instance, what we've seen lately is public guarantees for SME lending during the pandemic. They may have been effective in the short run, but such policies, need to be designed carefully to avoid limiting, public liabilities in the longer term, and to undermine and could undermine risk management by banks. Coming to the fintech and technology arena, of course, I mean, these could be potential game changers because, in terms of financial access, what matters, and I'll be very brief about that in the interest of time, is, of course, I mean, in economic fundamentals matter, but also institutional factors such as governance and regulatory and supervisory capacity. What technology can do is leapfrog some of the constraints on bank lending, because, for instance, having access to big data analytics that can combine SME registration and accounting with geographic and socioeconomic information, that's something traditionally banks have struggled to be able to do in a meaningful way, or at least not in a cost-effective way. And so, such data, for instance, can generate real-time credit scores, which are going to be important. And I think this speaks a little bit to the point made by Denelle earlier, which is that, we have to be careful not to throw the baby out with the bathwater, which is that technology can do a lot of things, perhaps even better than traditional banks can do. And for instance, this idea of real-time credit scores that I mentioned, better credit risk management in some cases. And electronic platforms also, of course, foster competition because borrowers can compare products and enhance competition. Technology can also, open entirely new funding sources for SMEs, crowdfunding, peer-to-peer electronic platforms. Banks have traditionally found lending to SMEs to be, in many cases, I'm generalizing, of course, but in many cases, there's more, it's not as profitable as lending to big and, well-established firms and in well-established sectors. So if we think of dynamic economies where, new sectors and opportunities for growth arise in the future, that of course means, from a macroeconomic perspective, that both financial and human resources need to move from declining or slowing sectors to fast-growing sectors. And technology, in many ways, is better able to channel, by creating these alternative platforms to new and dynamic sectors where there's more job creation and more inclusion, including by gender, including by youth. Because banks often, once they're in a particular business, they know that they like predictability. It's for good reasons. It's difficult for them to be at the vanguard or leading the move to new sectors. So crowdfunding, peer-to-peer lending, other channels, invoice lending, e-commerce finance, these are all things that technology can do. So it's about not just substituting banks, but in a way complementing what they're doing and aligning them better with the fast-changing overall global and regional macroeconomic environment. Back to you, Oksana.
Thank you very much, Subir. And I actually wanted to change the order slightly and ask Denelle about her perspective on the big data and the use of the data for creating alternative credit history or the electronic identity and all of the things that impede the financial inclusion, particularly of the target population of migrants, displaced people, youth.
Yeah, no, I love this topic. Thank you so much. I think, first of all, we think about it as big data because traditionally this data sits in the hands of a few. And so it's big data because it's really, really, really important, but it's also certainly on the content side of the web, it sits in the hands of maybe 5 different companies that are in control of lots of data about humans out there and businesses out there. And so we think about it in that way. But I have to say, if you're using the technology that is available, and certainly if you think about blockchain technology and an open public network, it's immutable records that are put out there. They don't have your name associated with your account, but you certainly can prove that that account is yours. And it's an immutable record that is not erasable, that is not owned by any one entity. It's owned by the collective. And so it exists in a way that no government can erase, no private company can erase. And so you can actually show your history of what you've done, whether that's through lending, where you're taking a loan out through a wallet. Maybe it's a custodial wallet. So both the blockchain itself and the records from the blockchain and maybe the entity that gave you the loan and has custody of the wallet will be able to show that data that exists. But it creates such a different opportunity when you actually think about the ability to use this type of data that can't be changed, that's not rewritten, that sits out there and is not owned by anyone, but frankly, you as the individual who can point to it all the time. It creates huge opportunities. And so I want to think about it very, very differently from the way that we see the world on the content side, when all of this data sits in just one data warehouse for an entity. This data is available. And so proving up that you own the wallet or proving up that this was your account is something that you're going to have to do. But that's in a private sector, that's with a private entity way or with the bank. But it helps you to create a record of financial success that is different from the one that we historically thought about, where you have to prove up your credit score by going to financial institutions and getting loans, which is very hard to do with people who don't have already some credit. So it makes it very hard to do that. Yet, when you use this opportunity to use blockchain or other technologies that are out there that can deliver the same thing, you can show your credit history and what you've done in that way, and then build the credit history using that technology and using that information, maybe build a more traditional credit history with financial institutions and other ways. So I think this just provides huge opportunity for us if leveraged and used in the right way. And again, it will be not just from this immutable public record, but also from the individual financial institutions that you're working with on the blockchain, which are much more open to these kinds of ideas, even about lending and about access to being able to hold a savings. You can actually take your, you don't have to have a savings account. You don't have to go to a bank to be able to do this. You can open up a wallet and hold your digital assets in your wallet, whether that's holding them there without interest. Some actually are offering, some institutions are offering interest on the digital assets, or maybe you hold it in your wallet because of the volatility of your local currency. So you convert to some other digital currency and hold it there. Just having access to this kind of technology and these kinds of accounts that historically you couldn't walk into the bank to get very easily is just an awesome change. And so I feel like we have a lot of opportunity to convert from this thinking of what big data was is on the content side of the web and think differently about what's open to us and about what records are created for individuals who traditionally haven't had the kind of access to all of the different financial services that are out there.
Thanks a lot, Denelle, and it's very inspiring. And would like to now ask Kairat, because Kairat, Kazakhstan, as you alluded, Kazakhstan has been a champion in Central Asia on a number of parameters and now leading the digitalization. What, in your opinion, would be, apart from obviously the push to by COVID-19 have accelerated digital financial services, but what, in your opinion, were the building blocks of the success of the Kazakh financial system in switching to digital financial services?
Yeah, thanks. So I think that we know that probably it's a right way to see, to have a look on not only financial services, because of course in financial services we understand that fintech allows to reduce transactional costs, using big data, by the way, make more effective scorings, and reduce cost per customer for involving customer, involve money of public general for P2P, for example, for crowdfundings, and other instruments. But I think that we all understand that fourth industrial revolution is right here, and due to COVID-19, it like becomes real more fast than we have expected, for example, last year. And but these transformations and digitalizations and all of influence of these transformations will affect especially developing countries as Kazakhstan or post-Soviet countries. And in perspective, if we are not changing, if we don't change, it will affect very much negatively, because people will not be ready for new economy, for transformation of whole economy, will not be able to work in new spheres, and will lose their jobs in current spheres, for example, because of automatization, because of what we call a fourth industrial revolution. But at the moment, currently, I think that government have to force, if they have enough resources, force digitalization in different spheres, starting with GovTech, Fintech, e-commerce, and in other spheres. Why? Because at this moment, for example, build favorable conditions to boost this transformation by reducing costs, taxes, or exempt from taxes for certain spheres, for example, by making more flexible regulation, for example, because it's what I think stops fintech developing for the moment, because technology is growing very fast and moving fast, and people are ready. And we see, for example, with this Kaspi example, when people, for example, are ready to merchants receiving money by transferring for P2P transferring, and it shows that people are ready, technology are ready, but government and regulation sometimes not ready. And we have to give these tax exemptions. We have to even support with grants or in other investments, support the startups and transformation, because at the moment all this spendings and future probably tax exemptions are less than potential positive impact of this people who is now bringing people in banks, so unbanked people, making bank like involved in this financial sphere, first of all, and second one, SMEs, which now on shadow economy will become a part of like economies that we can see, that we can count, etc. Okay, let them for the moment not to pay, like in Kazakhstan. I think the first SMEs taxes are not very big, but this digitalization forces them to pay even this, and allows them to make it with low cost and very comfortable. So, and they will do, they are ready. But this effect of digitalization and transformation will be much more than costs for this transformation. That's what I believe, and I think that's why we have to move very fast.
Thanks a lot.
AIFC, of course, it's a platform ready for this and very suitable for this transformation, because of regulation. We have, you know, that we have separate regulator with sandbox, and it's I would say it's most successful sandbox in the region, because we have more than about 35 startups like registered in sandbox and trying to build, and it's for about 1.5 years. For example, in Russia, our like biggest neighbor, close and big neighbor, in central banks, they have also sandbox, but they're very accurate in like involving new startups. They mostly involve like big fintechs to make it more secure. We kind of risky here, but we think that all this transformation and startup support, we have to need it to another approach, not very secure as
Thanks,
Denelle
Kairat.
said.
I was just reminded of the time, but thank you very much for bringing an important issue of the role of the government in instilling the trust in the digital financial systems.
Thank you.
I don't see any questions in our chat functions, so maybe we can ask Heba to make a concluding remarks on the role of the fund in encouraging the cross-border and the global establishment of the payments global financial system among its neighbors. Heba, we can't hear you.
Can you hear me now? Yes, okay. Thank you, Oksana. And actually, as you know, the Arab countries already have a diversified payment system. Some of them, or most of them, have RTG system, which is very advanced, and some others have ACH, while a handful of some of Arab countries have what we call real-time retail payment system. So it's diversified in terms of payment system. So there is a need to have a unified platform for cross-border transaction settlements. But the most important thing is that settlement of cross-border transaction between Arab countries actually now is very costly and time-consuming process, depending on the correspondent bank, which is very costly, as I mentioned. It's cost around $33 US, and it may take time range from 3 to 5 days. So the priority for Arab Central Bank in the last years was to establish the first regional cross-border platform to facilitate cross-border settlement, and this will also help to increase intra-regional trade and investment flows between Arab countries. And this is why the Arab Monetary Fund, after a close and extended and extensive efforts in the past year with the Arab Central Bank and the Commercial Bank and also International Financial Institution, released in 2020 BONA platform. And as you know, BONA is a unique platform, regional platform, which is simple and risk controlled and also low cost platform that already facilitates cross-border transaction between Arab countries. They use already the currencies of many Arab countries, which already meet some certain predefined criteria in addition to US dollar and also euro. This platform also comply with all AML and CFT requirements, in addition to other international standards that already help our central banks to have or ensure the supervision or oversight of the central banks on all cross-border transactions. This platform now in the initial phase concentrate more on large-scale payments. After that, we have a vision to focus more on low-level payment, remittances, and other low payments, so as to help facilitate, encourage financial inclusion within our region. And this would be accompanied with some certain challenges that we are working now to have a vision on how to overcome these challenges. But we have a vision to use this platform to the maximum benefit of our member countries. And in front of this objective is to increase financial inclusion. Thank you.
Thank you very much, Heba. And with that, let me thank all of our distinguished panel speakers and the organizers of the event for having this exciting dialogue, and which I hope will continue. Thank you so much for participation.
Thank you so much.
Thanks, everyone. Thanks for joining the session. Sorry, we have to run, as we have a next session, which also will be quite complementary about what we have discussed. It's going to be clearly more on the current acceleration, I would say, about should central bank issue digital currencies, with a very strong panel among policymakers and academics. So if you have time, you are, of course, welcome to join. And I look forward to seeing you again in person, hopefully soon. Thanks.